It's pretty amazing. So,
It is.
well, good morning, good afternoon, good noon. Welcome to Find the Edge, the release of the Emergent Edge technology. As Ryan and I were both just saying, we're pretty excited about this. This has been a system that's been in the works for months and months and months. Back tested, front tested, live tested. We'd love to see what it's doing. This is a results oriented program, and I just want to get started, Ryan, if that's okay with you.
Please, let's kick it off. Let's make it happen.
So the quick disclaimer, guys, a lot of the information that we present, as you guys know, it's for education purposes. We're not financial advisors. Historical results are not indicative of future results. Past results, back testing, things like that. You guys know that script. If you need to see our full disclaimer, it's at the bottom of any of our web pages, targettrading.co, Bubba Trading, Vici Trading Solutions, and any of the companies that we got. So you guys keep hearing me talk about Ryan. I got to tell you, so Ryan and I have gotten to know each other pretty well, and I don't like a lot of people. Probably fewer people, probably fewer people than Pat, but I really like Ryan, guys. Ryan's a 20-year professional trading veteran, former floor trader at the Board of Trade. He developed VT Trading Solutions, which is what we were just talking about with the daily trade plans, and Emergent Edge Technologies, which we're going to be introducing you guys today.
And
Ryan's
and
taught
real quick,
thousands.
I can't take all credit for that. My partner Rob's actually going to come in here a little bit. He's kind of yeah.
I promise I'll give Rob the credit. Don't worry.
All
He's
right.
on
I'm
here
just
too.
I'm just throwing it out there. I mean, hey, listen, I don't want to
What
take
do you
all the
figure?
credit.
You're about three to 5% of the credit,
Yeah,
and the
right.
rest is
I have an amazing picture, as you can see. That's my credit right there. It's an amazing picture.
so
Sorry, go ahead.
so
Sorry.
Ryan's taught thousands of traders, countless success stories, guys. Check him out. I mean, his Vici trading stuff is really cool. As I said, we've been partnered with them, and we're doing a lot with them now. I believe in Ryan. That's the easiest way I can say this. You guys well know, especially you guys that are here that are longtime target customers. You guys know I get rid of stuff that doesn't work. I don't like things that don't work. I use everything myself. So when something isn't right, I move along and I hunt. I'm constantly hunting for something. And I honestly, I feel lucky to have found Ryan and to find Rob, and to be able to work with these guys and do what they do. So that's Ryan Bailey, guys. Second is Rob Curry. Rob actually just joined
Woo!
us.
Look at that picture. That's a
he,
good looking guy there.
he didn't even know that he got accolades before he got on the call. So Ryan, guys, or Rob, I mean, I'm sorry. Rob has a master. Look, he's a master developer of quantitative trading strategies. That's a lot of fancy speak. Okay. I love the word quant, and that's what Ryan calls him. He's the quant. This is the numbers guy. Okay. Masters in math from Yale, 20 plus years in applied mathematics consulting, including McKinsey and Microsoft, a couple small companies you might have heard of. Okay. Active trader. Now, he's the managing director at Roan and he's the chief technology officer at Vici. One of the things that I love the most with Rob, okay, and anybody that's been in this circus that we call day trading for any period of time knows this. There's developers, there's math guys, right? The quants, and then there's traders. It's very rare to find somebody that qualifies on all three levels, and
True.
Rob is that guy.
Yep.
You spend 5 minutes talking to him, you realize, wow, he's really smart, and you're just trying to keep up. You spend the rest of the conversation just trying to keep up. So, welcome, Rob. It's me, guys. 25 years in the finance industry, former investment banker, founder, owner, and operator, multiple trading education companies. I think the
Amazing
most
hair.
important, amazing hair. I think the most,
Amazing.
that's my Superman hair, baby. It's my Superman hair. I still got it. I got
Amazing
it a little
hair.
bit longer. I'm going to ride it out as long as I got it. So
Good.
guys, I think the most important thing with my bio is I'm not just the president. I'm also a client. I use
Amazing
our
hair.
systems. I use our technology. I eat what we make. So I eat our dog food. It's important if we produce something that's not performing, guess what, guys? I got to eat that dog chow. Okay. So it's very important that we find stuff that works. That's why I'm so excited about this program. And then last but not least, most of you guys know Joe. Joe is in here. He's not in the chat group, but Joe's in here. Joe's our student services coordinator. He's the guy that helps all of you figure out what to do next. Joe's got a ton of experience in the industry. 23 years in the financial industry, 10 years in trading education. Actually, he's almost 15 years in the trading education space. I have to update that. And he's also a very successful prop trader in his own right, which is something that comes up a lot these days. So you guys can check out our companies, 5-star rated all over the place. I mean, there's no other way to say it. We're pretty darn good at what we do. Okay, I'm gonna just jump past that slide.
If I
So
don't say so myself, but I'll say
if I may say so myself, right? So
it.
one of the things I just want to just pause on this point for a second, guys, and I'm going to move past this quickly, but I just want to say this real quick. So one of the reasons that I got into trading myself was that I kept hearing from my quote advisor, right? Um, what I kept hearing is stay diversified, hold through crashes. That's just how the market works, right? These are common things that I kept hearing from my advisor. And I want to own what's winning. I'm going to be straight with you guys. I want to be diversified, but I also want to own what's winning. If half of my stuff's winning and half of it's losing and I'm break even, that doesn't do me any good, right? I want it to own what's winning. And I'm sure I'm not the only person that thinks this way, right? And another one was hold through the crash. Well, how about you just go to cash every night? How about you make enough that you can get in cash every night? That was the whole idea behind getting into trading for me. And then that's just how the markets work. Yes, of course, we have to live through the markets, guys. We have to live through the markets, but replying to an issue that's just how the markets work, to me, that's avoiding blame, right? You can be wrong. I can be wrong. Sometimes I make a bad call. The best systems in the world don't win 100% of the time. And anyone who tells you they are is not telling you the truth. Okay. Take ownership. Realize that this is a math game. Okay. This is a math game. And the more times, the more swings you get at bat, if the math is in your favor, the more swings you get at bat, the more times you win. Okay. So I just want to start off by saying that that's a tough thing for a lot of people to understand. Okay.
Sure.
That take ownership of what's going on and run with it. Okay. Ryan, will you just walk me through? Because I mean, you deal with this every day. These are the big problems that you see why most traders struggle.
Yeah, sure. I mean, I think a lot of it has to do with everything that you laid out here. I mean, the biggest part about it, in my opinion, is the first one, the no structure, right? So a lot of people come in, I mean, listen, trading looks so easy in hindsight, right? It's like, oh, I had a bought here and sold here. I can't tell you how many times my kid tells me, Dad, why didn't you hold it to here? And I'm like, listen, this really not having structure is a lot of people's biggest problem, right? So they come into the day and they have, 10 different ideas. They saw something on YouTube they think works, et cetera. So really just coming to the day with no defined plan, no defined levels, no edge, just guessing, right? Just like you said, I mean, this is the biggest ordeal, right? Which is, not to deviate from what we're doing here, but or what we're talking about, but that's really why the trade plans that I do go over so well is because people come in with an actual structured trade. They know exactly where they're looking to do business. And that really means everything in terms of, how we trade. Because guys, listen, trading is not a hobby. This is a career. This is a real business. And you don't go into a business with no plan, right? It's the bank will never give you money if you go to them with no plan, right? And so
Yeah.
it's the same exact thing, right? And the guys chase setups constantly. They miss the move. They're a little unsure. Like, oh, I should have bought that. Let me get in 10 points late, right? And the next thing you know, they bought the top, et cetera. And again, that really kind of comes down to no structure and no plan, right? These all kind of mold into that very first bullet point, in my opinion, right? And the over trading is the same thing, right? They've either missed the move, they're trying to, catch the highs or lows. They don't realize that we're trending. Oh, well, we're overdone. Let me fade this, et cetera. And death by a thousand cuts is 100% real. If you really don't understand how the market works, the market mechanics, over trading, I mean, it happens. It happens to me at times. Like, I mean, it does happen, especially if I go get stuck in a small time frame or something. You can chop yourself to death on a very slow, grindy day. Yesterday was a perfect example of how that was possible. We're just grinding into all-time highs now. And the accountability problem is, dude, I was just talking to a partner of ours just before we had this phone call, Michael, about people who refuse to take accountability for their own actions. You push the button. How is it? That's your fault, right? No matter what, who you try to blame, people, they simply do not want to take accountability. And when you have, that is a big one. So no mentor, no system to follow, no plan, and they blame the market usually.
I think this really boils down to two things. I think and it's a lot of different factors, and there's other things that come into it besides this as well. But I think it comes down to two things. You have to have a structure, and you have to have the discipline to stick to that structure. If you can do those two things, you can trade successfully, right? If you have a structure that works and you can stick to it. The problem is that most people don't have both of those things, and if they don't, You give them the plan, they can stick to it themselves. But if they don't, you've developed now this program to give them both the discipline they don't have and the structure or the ability to leverage themselves outside of that, which is really what brings us
Correct.
here today, right? So this is
Yeah.
what Emergent Edge is. All
Yeah.
right. So Emergent Edge, guys, that's the name of the technology. Why is it so appealing? All right, let's talk about the setup of what Emergent Edge is and why it works. Okay, let's just get right down to brass tacks here. One, it's fully automated. It's 100% automated. It's going to come in two formats, which we're going to talk about in just a minute. Whether you want it on your own charts or you want it on in a letter of direction format, either way, it's 100% fully automated. Okay, so
And
there's
Mike,
no, yep,
let me stop you right here. This very first bullet point addresses all four of those issues we had on the last
right
page.
out of the gates.
Right,
Right,
right. You have the accountability part is done, right? You don't have to worry about that. This thing trades with an exact structure and plan. It does all that, right? And so this really takes all the guesswork out of it. And that is truly the emotional aspect for those of you guys who are new at trading, experienced at trading. I see Mr. Kennedy's here. I know he's experienced in trading. He could probably tell you for a fact, like a lot of this is mental. It's emotional, right? And that is one thing machines don't have is the emotional aspect, which is what makes this so beautiful. And trust me, from a guy who's been trading 20 years, I still get very emotional. And so this is a huge deal for even me, myself. So,
absolutely.
yeah.
Absolutely. So when you say it has a strategy, it's an opening range trending entry. Talk me through exactly what the strategy is that it's trading.
All right. So basically, just, 30,000 feet, we're talking about it captures the initial momentum off of the 15-minute opening range. So what it's doing is essentially looking for volume that comes in into a certain direction. And we basically take the first 15 minutes. And if we pop out of that 15 minutes and pull back with certain order flow dynamics, that essentially it triggers a long or a short based on which direction we're going to go. And that's it. And it essentially rides that first 15-minute opening volume or opening, movement, which is generally, as we know, there's usually, most of the action happens before lunch. So
Right.
it
Right.
captures that.
Um, ES only.
Correct. Yep.
Okay. Walk me through why. What is it about that? Why you've defined it specifically to this market?
Well, I mean, the ES, two reasons. One, it's a personal thing. It's what I know very well, right? And so for me, it was easier to create a strategy based on something I know, like, very well versus something that, I don't have. I look at this market every single day. I know this thing. This is like my child. I know that sounds kind of crazy, but I know everything about it. I know the way it works. I know what kind of
You have an
volumes we should
ugly
look
child,
at.
sir. You have an
I have a
ugly
very
child.
ugly.
So,
I mean, just look at me, right? You can only imagine what my spawn looks like, right? So no, so really, and honestly, and the other big thing the reason I like ES is not only the fact that we understand how it works, the volume, the order flow, and the mechanics of all this. We have real institutional players playing in this market, and we can actually put on size in this market, and it won't even burp. For instance. I can take 100 contracts at a market and we won't get any slip. That is very rare that you have that in any market. You can't do it in NQ, which is NASDAQ, gold, or oil. Impossible, right? You're going to get a couple ticks here and there. With ES, we can lay into this thing with some serious size and we get the fills that we're supposed to.
and it's also a market, like you said, that you understand the movements, the
Correct.
expectation of movements each day, and you've developed the software. I mean, correct me if I'm wrong here. The software has been developed for the ES and those types of moves. So it's not a
Correct.
general software that can apply to all markets, which loses that last little bit of honing that when you're specialized on something.
Absolutely. So we, again, this is all based off of quantitative behavior and math, right? And so we have designed each one of our algorithms to be asset specific. And Rob has done that for a particular reason. And I'll just break it down to you in a very simplistic manner. And this is just a speck of everything. But I'll put it to you like this. We know exactly how much volume and delta is in a 1 minute candle. We know exactly how much volume it can take at the market or the bid, right? Like the bid or the ask. We know everything about this, right? And what this can take on a market or whatever is we know for a fact isn't something that NQ could do or oil could do. And so we make each one of these strategies asset specific so that it is dialed in and tweaked accordingly for each one. Because if you can know anything about trading, some of you may not know anything about it, but some of you may know more than you care to know about it. You probably know that each asset has its own vibe. It has its own feeling, its own momentum, its own ranges. It's the way that it acts. Like MQ, if you guys are futures traders, that thing is like an adrenaline junkie's paradise, right?
Roller
Whereas,
coaster. Yeah.
ES is, a little bit more tamer, but it's thicker. And so it just, each one has its own mojo. So
So you had mentioned that you're looking at that opening range. You've got one trade a day, a max of two. Can you
correct.
walk me through how that would work?
Yeah, so essentially we only take one trade per day in each direction. And the reason why you have max of two is because it is possible for it to take a long and a short based on the time frame in which everything revolves around. So generally, and I've only seen it take one trade a day since we've been since we've been trading this. However, the back test results do say that it has taken a handful of two trades a day,
Two
one in
trades.
each direction based on the volatility and the time of trade. So,
Okay.
and I think that's probably where your next slide comes in at. And I might
Well, I'm
as
going
well.
to get into yeah, I'm
Okay,
going to
all
get
right,
into that as we go because
fair
I think
enough. Go
that's
ahead.
an it's very important by the way, the one trade a day because I think that plays a role in understanding how it performs. I think it plays a role in when you get to the Monte Carlo simulation, which we'll get to in a little bit about why the statistics are where they are and things. So
Right.
now this is the part that if you don't mind, I'd like a little bit of
Sure.
depth in explaining this.
Yeah, and
It's scale.
Rob's here, and I'm sure Rob, if I say this incorrectly, please feel free to chime in. But Rob has basically built it, so it dynamically scales the contract size based on our risk. So right now we have this dialed in, so our max risk is $320. And I'm gonna use something that you guys can understand very, very simple. Let's just say that we have a moving average, okay? And based on where price is located next to the moving average, that's the size of that's how many contracts that it puts on because our stop is relative to that moving average, a certain distance away from that moving average. So again, if this moving average, quote unquote, is closer to where our entry price is, it might put on seven contracts, right, in order to have that $320 stop. But if that moving average is farther away, then it may only put on two contracts, right, in order to get the $320 stop. So, for instance, yesterday or 2 days ago, whenever it made the $510 on the cash account for you, Mike, it had on nine, right? It had on nine because it was real close and it worked out. Today, it only had on two. Okay, so that's in it because it was obviously a little bit farther distance. So I hope that kind of gives you the idea of how that works.
And to be clear, so the scaling is 2 to 10 contracts. The one that's currently in the LOD is a micros contract. It
Correct.
is available also in minis, but the current one is micros, and
Yeah.
that is $320 of risk per trade is what it's set for, right? That's
Yes,
the
correct.
calibration.
So no matter what, that's the most you could risk, basically per trade. And really, it's kind of per day. Like I said, I've never seen it take two trades a day, even though the back test says it
Back
does.
testing shows it, right? Yeah. So you use this term, and I love this term, and it's you use this term called the positive expectancy model. So anytime you build out these algorithms, you want to build them with a risk reward ratio or reward to risk ratio that is a positive expectancy model. So can you
Correct.
walk me through how that first target, second target works here?
Yeah, sure. So when we put the trades on, basically, in order for us to have the proper expectancy or, to make the kind of numbers that we're looking for when we talk, break down the metrics, we look for at least a 2 to 1. That means that if we put on $320 worth of risk, our first target, what we're trying to make is basically, what is that, $640, right? That's the very first target. And then that is essentially where we take our first target, we move our stop to break even, and then we look for the runner to take us to 3 to 1, right? So a 3 to 1 is like unbelievable, and it does happen. It happens quite frequently because this thing catches that early morning momentum, which really catches the push. But that is essentially how we break it down. And when you have a 2 to 1 and a 3 to 1, you can have a 50-50 win rate and still make a lot of money. So.
Right. Right. I find it very interesting that so you set that target out 2 to 1, and then when
Yep.
it moves to break even, it moves to 3 to 1. That just so I make sure I understood
Yeah,
that.
so as soon as we enter the trade, it immediately sets the stop based on the dynamic risk
Right.
reward structure, and then our 2-to-1, 3-to-1s are immediately out there. And so the moment it hits the 2-to-1, the stop comes up, and then the 3-to-1 stays there until it either gets hit or it gets trailed out.
Love the detail in the trade, by the way. I think that's
Yep.
so important that the way you have it set. And then we talked about this earlier. Most of that action happens in the morning. This thing hard stops at 11 a.m. Eastern.
Listen, it's hard for me to wrap my head around too, because I'm always like, I tell Rob all the time, like, maybe you should look and see if 11:30 is better. And he's like, no, bro, it's 11 o'clock. And I'm like,
11.
yeah,
Pull the
like,
brakes.
okay. So it really only trades for an hour and a half in the morning. It turns on at 9:30. I think it actually takes the trade after 9:45, I think. Yeah, because it's the first 15 minutes, right? So it actually won't enter the trade until at least 9:45, and it turns off at 11. Now, if it's in a trade past 11, it'll hold the trade, right?
But you
But
already
it
have your
won't,
stops and stuff in place.
yeah, but it won't actually enter the trade until, I mean, it won't actually enter another trade after 11 o'clock, but it'll hold a runner. It'll hold all day. So,
Very cool.
yeah.
Very cool. I think that's huge. How does the strategy handle news events such as FOMC, unemployment, things like that?
Well, so I think Rob could probably answer this question a little bit better. And Rob, if you don't have a problem chiming in, but I
Yeah.
know that Rob, so our platform tells us the best days that this is performing. So I know there's certain days, and because Rob's the orchestrator of all this, he could probably inject that a little bit better. Rob, do you mind?
Yeah, no problem. Basically, we have a really big economic calendar that stretches back, 15 years, and so we can check on every day how this thing performs. And so, like on a CPI day, average P&L is a little over $100. NFP day is a little lower. OPEX, which I was really concerned at, is actually its highest performing day, with an average P&L a little over $200. So, I mean, we do actually look at all those news events, and the only one that has been sort of on the edge, which is like FOMC minutes, but those come out after it's done with its trades. So overall, it actually has been handling news cycles fairly well because we've had news events before the open, or we've had them after they've occurred, but we can watch all of that. But alternatively, if there is some sort of crazy news, we can like hit the stop button and say, okay, we're not trading today.
Turn it
There's
off.
just too much going on. There's too much headline risk. So that's always something we can consider doing.
Yeah, but it does handle the trades. I think something two important things you said there, Rob. One is that the events that come out in the afternoon have no impact because you're already done trading, and the trades in the morning will already be taking those into account. And then the ones that are pre-market have already played themselves out in that first few minutes. So
Yeah.
you're either way, it's not really affecting you. It'd almost have to be that instant timing right there. And even then, you guys have managed to trade right through it. So you're trading
Mhm.
through the cycles.
We've actually
Very cool.
had more success with the volatility, because then you get those bigger ranges. So
Yeah,
like,
no,
yeah.
that makes sense.
Yeah.
Yeah, makes a lot of sense. I mean, this is what everybody always wants to see, right? Everybody always wants to see the numbers. So guys, I want to explain a couple things. First of all, we've been running it live on an account, directly on the account to get results. Second is they have developed, and this is really Rob has developed a phenomenal backtesting tool.
Yeah.
Those of you guys that are futures traders, you guys can appreciate a good backtesting tool because most of the things that we have access to as futures traders are terrible. Okay. I also trade Forex, so I see some of the quantitative modeling that you can do in Forex, and it's amazing. The way you can manipulate the data and work with the data is fantastic. Futures, it just seems to be no one's ever taken the time to develop a really strong backtesting tool. Rob has been working on that. That was actually his primary project to this, and it's amazing, guys. So what we've done is we also backtested the program and compared it to the actual results that were live results and found it to be linear. So this is very, very good. I want to start with that. The results, the first round of back testing that we did, the results are fantastic. Okay. The numbers that I'm working with are the ones from January 1st to April 15th, which was 2 days ago. And just to be clear, guys, as I started this conversation off with, there's swings up, there's swings down, there's drawdowns. This is over the period of time. We're going to show you guys the charts with all those ups and downs in them. Okay. So we started with it. We used it an account balance of $10,000. Now, I'm going to explain to you guys later. That is what we recommend the minimum account size being. That does not mean that that is the minimum account size. That is what we recommend it being. And I'll
Yeah.
explain why later we recommend that being the minimum, but you can trade it with smaller accounts. Okay. But we recommend it for a reason, and we'll explain why in just a little bit. Net profit. Right. These are
I mean,
strong
I think
numbers.
the number speaks for itself, and I really hate that you're showing this number. When we initially started promoting this product, I wanted him to basically nerf this or curb it down to 30% a year because some of it seems a little unrealistic. And we know for a fact it's doing that. For instance, it's already at 5% this year, right? So we know it's putting up really good money. But again, I hate to like I just hate to show people that it does, 40, 50% a year. But this is essentially 186% on a $10,000 account that was over the course of, you had all of 24 and all of 25 and so far this year. So pretty fantastic results. And you think about this in scalability, right? So, this could, depending on your situation, this could be some life-changing money where you're making money from the back of a jet ski, as Michael says.
Well, so just so you know, guys, he asked me what successful we've had many fun conversations, and he asked me what successful trading sounds like. And for those of you guys that know me, I live in South Florida. I live on the beach. I have a great lifestyle down here, but if I still have to sit with my computer and trade, that's not really being successful. Real success is when I can trade from the back of a jet ski, and that's how I measure success.
I
You ever
love
seen
that.
anybody? So,
I love
so average win, average loss. Talk me through
Yeah.
this because these are strong numbers.
No, this is great stuff. So, the way this works is essentially, because we have the strong 2-to-1, 3-to-1 risk reward ratio, this actually, I mean, it fits every parameter that you would read in a textbook for trading, how you want your risk to reward set up. So ultimately, because it takes the high probability momentum trades and the whole nine yards, that, and we have a, 2-to-1, whatever, that this is how the numbers essentially play out. Sometimes it grabs a 3-to-1, sometimes it doesn't. But generally, as the trade is moving, the stop will trail up. So, we put on that initial risk of $320, which means if it just went immediately against you, that's what you'd lose. But as you can see, the average loss is actually much less than that because as price progresses, it trails up behind it. So,
Yeah, and I think it's very interesting because you're right above that 2-to-1 ratio, which is
yeah,
incredible.
right. I mean,
And
it's almost like we got the numbers.
yeah, yeah,
You
I keep
know?
saying that with the math, and it's funny because that's the one thing with this modeling that when you do take it out and you look at it over an extended period of time, it is formulaically accurate. I mean, the
Right.
formula stays with it over time.
Yeah.
Now, I want to talk about the pullbacks because
Yeah,
it's great that it has upside, right? And it's
for
great that if I
sure.
can sit in the trade for 2 years and 3.5 months, I can make 186% return. Great. But where are the scary times? And that's where I want to talk about. I want to talk about pullbacks. I want to talk about that side of it.
I mean,
Okay.
this thing's really trading, right? Like this isn't like a bullshit, like, like it always goes up, right? This is actually, built with real numbers, real statistics. We run it through volatility, the whole nine yards. And so, a 10% pullback, when I look at that, I'm like, that's a little much. But really, when you're looking at it, you're thinking, okay, it's $1,000 on a $10,000 account. That's not actually that crazy, right? So, if you look at it in that factor, it's great. And I think that's where you start to get into, and I'm sure you'll get into this later, where we started talking about the smaller account versus the larger account.
Account sizes.
It
Yeah.
really just depends
And
on what you're comfortable with. But ultimately, just to also know this as well, this is peak to trough, right? So this does not mean it's a 10% pullback from your account balance. This was a
right.
10% pullback from the peak high, which I think it
It's high
was already
watermark.
up about $9,000 by the time it pulled back 10%. Now, you'll see from this chart, but the moment we ran this, we've never dipped into our equity balance. Now, that doesn't mean that you won't, right? Like it just depends on where we're at in the cycle. But ultimately, when you'll see when he pulls this stuff up, I mean, this is a slow and steady eddy. This is an
Yeah.
exciting product. Yeah, it's an exciting product. So
I love the Sharpe ratio. And this is the relationship between volatility and the actual yield, right? So
yeah,
risk versus volatility. And guys, I beg you, please go Google Sharpe ratio. A Sharpe ratio over 1.5 is fantastic. A
yes,
Sharpe ratio at 2 is amazing. A
yep,
Sharpe ratio over 2.5, ridiculous. This thing's Sharpe ratio, and of course it's a moving number. This goes up and down, but over this period of time, this Sharpe ratio is at 268. I every formula that I've looked at, I haven't seen anything that's higher than 2.5. So that's an amazing Sharpe ratio.
It's really
Um,
strong.
it's so important to point that out. So that's essentially your relationship between your risk and your reward, guys, and
Well,
versus
so
the
listen,
volatility of the market.
you're exactly right. And it's also how well the capital is utilized. That's a big one to understand. Okay.
Functionality
So
of capital, yeah.
yeah, so the higher the Sharpe ratio, the better your money's being utilized. And just to let you guys know, and take it from me here, I mean, you can look for yourself. You don't need to, but you can easily look. If you go to LinkedIn and look up like quant jobs, they're only hiring guys that build strategies with Sharpe ratios of 2.0 and higher. That's it. Like if
Right.
you don't have it, you can't get a job. So
Right.
that gives you an idea of kind of where we're at in the scheme of things.
In the grand hedge fund scheme of things.
Yeah,
So
seriously.
so we started an account about a month ago.
Oh, I haven't
Played
seen that.
around with it. Yeah, so we actually the actual live trading effectively started on April 1st. So I will say this with this number, it is unfairly high because we missed we missed a little bit of a pullback at the tail end of March, which I think is important to point out, by the way. But month to date since April 1st,
No way.
$10,000 account is up $988 in
Dude,
two
Rob,
weeks.
hang on. Listen, I want to say something. I know this really I shouldn't say it here. I should say it to Rob later. Rob, you realize the first day we turned it on, it missed the $1,000 trade because we were trying to trade fulls on there too. Remember? So
And
this
it
is,
didn't take the trade.
dude,
Yeah.
this is actually
Yeah,
up
yeah.
almost 2 grand. I didn't
Yeah.
realize that. Okay,
Yeah,
sorry.
and it also took that little pullback at the tail end of March, which may have balanced it out, but
Yeah,
it literally the actual it missed that whole series is what I'm trying to tell you. So the
that's
April 1st date
great.
is 988 guys in 2 weeks. So that's live real numbers. I have the stuff to show. I got receipts, as they say.
That's
Um,
cool. Thanks for sharing that.
so this to me, the next two charts are extremely important, and I want you guys to understand. We talk about numbers, we talk about methods. This is the stuff that gets really important. So this is the back tested data back through January 1st, 2024. As an analyst, right? So I'm an old Wall Street guy, right? Old Wall Street guy. How do I want my charts to look? I want it to start in the bottom left. I want it to end in the top right, right? That's the way charts you want to look. But you also understand that along the path there's bumps, right? And the key with this chart is that people who are looking at this and considering using this software is it's not a straight line, guys. Okay? There are pullback periods. There are some pullback periods. This is those signals areas, okay, those areas where it's shaded in is the time period that it took to get back to that high water mark. Okay, so you will see there are periods of pullbacks. One interesting thing, and you and I were just talking about this, is it
Yeah,
seems like
yeah,
Q1 historically has been a difficult period. For whatever period, Q1 has been a difficult period. It's interesting because going into this month, we actually had a pullback period, and we're getting on the front end of that ride back up right now, which I think is extremely important. Understanding that this is not a bottom of the line, top of the line move. One important reason for that, okay, and why this is stretched out by periods is anyone that's an active trader knows this, right? Statistics, the higher times you take swings at bat, the more swings at bat you take, the more even and plain that line gets. But if you're only taking a trade a day, 4 trades a week or so, it's going to be a little bit bumpier of a ride. If you were taking 5 trades a day, 20 trades a week, this line would be a lot smoother from the bottom left to the top right. So as you consider engagement with this, I want to make sure everybody understands there are periods of pullbacks. It does recover from those periods, right? But there are periods of pullbacks. So it's important that if you start off in a period of pullback, the oh shit, it doesn't work isn't really the right mindset for this one. This one trades, but it trades over time.
no, this is
So
this is a long-term performer. I mean, this is you put your money in here and you look at it once a month or once a quarter or come back to it at the end of the year, and you just know, and you're going to get to this here shortly. The data proves that the numbers work, right? And so you
yeah,
just don't you kind of just ride the grind out. Almost, it's just one of those things. And so because they're so shallow, they're relatively shallow dips. It's not too hard
right.
to ride out, honestly.
The
It's
biggest dip was 10%.
Yeah,
from the
$1,000.
high watermark, 10%
Yeah,
from the high watermark, to be clear.
yeah,
So that's a huge number.
yeah.
Monte Carlo simulation. For those that don't know, Monte Carlo simulation. Oh, uh, Jim, yes, you can scale up from from the from the 2 micros to the 10 micro model to other models. That's something that we have to talk to you about. Let's say you want to do more than a $10,000 investment. There's a couple of different ways to do that, and we can talk to you about that separately. I'm assuming James Kennedy. That's Ryan. That's one of your guys, right? Yeah.
Yeah, 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 for sure.
All right,
James,
perfect.
you're gonna like this product, James. It's dope. I've got to listen, guys. I'm done talking to James
It's
here.
dope, bro. It's
Dude,
dope. Just say it.
James, I've got it across every single one of my accounts personally because why not? Like I'm sitting here
Yeah.
trading discretionally, manually every single day, and this thing is trading different than me. So it's
Yep.
amazing to have something working in the background while I'm doing something completely different. It's almost like having a trading partner who has a different strategy. I love it. It's awesome. And I'll just use this as an example. And I'm
Yep.
might as well tell you this. 2 days ago, I was short. I told Mike the same thing. It was short. I took a $225 loss or $250 loss on a level I could have swore was going to work. This thing was long. It made 510 bucks. Right. So at the
Yep.
end of the day, I still made 250 bucks. I was super happy.
Thanks to your partner. Thanks
Right.
to R2D. Thanks to R2D2 over here, your partner, right?
Yeah.
So,
I was super happy. All right.
so, um, uh, Doug,
Sorry,
there
just
is an
to
answer to that. Let me
Hang on.
get to that. I'll get to that answer in just a few minutes,
Hang
Doug.
on.
The question about prop trading.
Let Rob say
Oh
something.
no, I was just going to say I think my favorite story is you were literally in Florida with your son on rides and the thing made like 800 bucks that day. It was
Yeah, I
great.
called you. I'm like,
Yeah.
how'd it go? And you're like, we made 900. And I'm like, back to vacation.
Yeah. Take the taxes out. Now this is what
Yeah,
I have
right.
left to spend on the vacation. All right.
Yeah.
Um, so real quick, guys, I love Monte Carlo simulations. This is a real quant look at things, right? So one of the things is all it does is it takes 1,000 simulated trades. Okay. So it takes 1,000 simulated trades. Now, if you're trading this model, you're trading 4 days a week. This is 4 to 5 years of trading, right? Realistically, I mean, correct me if I'm wrong there, Rob. It's about 4 to 5 years of trading, roughly somewhere around there to get to
Right.
that number,
Yeah. And
right?
we can scale this up to 1 million, no problem. That we just did 1,000 real quick, but yes.
So that say to 4 to 5 years, worst case is you're at 22,000, right? Your top of the line numbers are looking about 41,000, right? And your median numbers are about 31,000. So this thing is doing exactly what it's supposed to do long term on scale.
Right.
The number that I like the most on this, though, is the ruin probability. Okay, risk of ruin. That's your chances of blowing out the account with this model. And I don't know if you guys can see it, but that's a less than 0% chance. That's a strong number. Um, you don't see that very often. Again, I'm going to say this. You don't see that very often. It's a very powerful statistic. Okay. We've done a lot of modeling. As I said, I do a lot of Forex trading as well. And in Forex trading, you can test your risk of ruin on things like my FX book and things like that. And it's usually 2%, 3%, 5%. But over a lot of trades, that's a number that gets hit, right? But when you're less than 0.0%, that's a really strong formula. Okay.
Yeah.
So as I said, mathematically, this is a great formula. Um, and I'm sorry this is blurry, guys. This is a screenshot, literally taking off of the stats. I want you to understand this though.
This came straight
Look,
out of the back tester. This is right
yeah,
out of
this
the
is
back.
literally, yeah, this is straight out. Look at the stats. Okay. Understand why these stats are so important. Okay. It's not a steady ride up. It's a ride up. It's just not perfectly linear east to west or west to east. Okay. Left to right. It takes bumps. There are drawdowns. They're not massive drawdowns, but they're there. You have to be mentally prepared for that. The expectation has to be that it's okay when it goes through those periods that it will recover. You'll also see some outlier months. You're going to see 15%, 10%, 15%, 14, 14. Okay. So you have those big ups. Yeah, exactly. Don't trade in January. It's funny. We were actually just talking about that.
Yeah,
Don't
we
trade in
were.
January. So we
Yeah.
said that for some reason, that period of time, end of December, early January, it seems to have a pullback every single time. It's not a news issue. We're not really sure what it is, but that's a period of time right there that it's got that pullback. Um, how to get it? and this is going to answer, Doug, this is going to answer your question as well. Okay. So it is available in two formats. Okay. Two formats. And you have to be very clear about the understanding the difference in the two formats. First is letter of direction via Capital Trading Group. Those of you guys that are long-term customers with us, you're familiar with letter of direction. And I'm going to talk about that in a second. I'm going to explain what
Yeah,
letter of
please.
direction is if you're not.
Please do.
Okay.
Yeah.
The second is you can get this as a fully automated software for your personal Sierra Charts program. Okay, so you can put this on. It is only available on Sierra Charts. Okay, I want to be clear. So if you are a prop trader and you wanted to use this on your prop account, it is available on Sierra Charts. It is not available on NinjaTrader. Okay, it is not available on TradingView. It is specifically Sierra Charts. So if you're not familiar with Sierra Charts, you would have to get familiar with Sierra Charts to be able to use it. I just want to be clear about that. So it's
And
available in those two.
can I interject one thing?
Go ahead, Ryan.
So one of the things that, just to let you know, if you guys don't have any experience with Sierra charts, one of the things that we were going to offer is like a setup call. So really, this doesn't take a whole lot to set up as far as like we literally, would have you install Sierra charts. We would give you the software, the one file that goes in there, and we put it on a blank chart, a blank 1 minute chart. And that's all you need to have up, and just make sure you have a little real estate for it, or you can put it on a VPS, whatever you want to do.
Yeah.
But
Let
it's
it run.
really not a lot of setup. And here's the other thing, since Mike went ahead and put his foot in his mouth with the prop firm stuff. Guys, listen, most prop firms do not allow automated trading. Okay, they do not. They have it all over the place that they don't want to allow that. There are a few select firms that allow that, but
Very true.
that's why we predominantly push this towards cash accounts, because there's no limitations there. And with
Yep.
limited risk like this, you don't necessarily have to worry. I understand the attractiveness of trying to prop farm with it, but also please keep in mind that this is a slow and steady. So it doesn't really, like with the prop firm model, it's a little bit more difficult. So go ahead.
Yeah, and I think you actually, I was one of the things I was going to say was one thing you have to be aware of. Most prop firms have the language. Not all of them, to be clear, not all of them have it, but most of the, especially the big guys, will not allow you to use fully automated software on their
No,
platforms, and they
they're
have
not going.
AI that catches it. Just so you guys know.
Yeah.
So there are firms out there. So don't misunderstand me. There are firms out there that allow it, but if you want, we're looking to go that route. But the other side of this is if you go the letter of direction route, this is not a massive investment. Okay. Our recommended number is $10,000. Okay. As a minimum. All right. Gives you a great ROI. If these statistics hold true over time, gives you a great ROI. Okay. If you do 5,000, okay, you got to remember all of those drawdowns, all of those things, those numbers double. Okay. So they double. You have to go into it knowing what the risk is. Okay. Not saying you can't. You have to make sure that the margin that you're eligible for qualifies for it. Okay. But it's not, it can still be done. It's only
For
trading
sure.
micros. It's trading 10 micros.
Yeah,
Okay.
right now intraday margin on micros is $50. So
50
technically
bucks.
you only need $500 in your account for margin. But again, $1,000, like Mike said, $1,000 is $1,000 no matter what size your account is. The percentages just change. So the
Right.
reason why we promote the $10,000 accounts, because from a numbers perspective, it makes a lot more sense. Some people aren't prepared to take $1,000 drawdown on a $5,000 account because it's like 30%. So
Right.
I think that's kind of sorry to interject, but yeah.
Yeah, but that's exactly what I was saying. So you really you don't need a big account to be able to do it. And that's a real big play. That's in my personal opinion, that's the big play on it. Um, So let me talk real quick about letter of direction for those of you guys that aren't familiar with it. Okay. Letter of direction, your money is in your brokerage account. Okay. You may need to be at one of the justified brokerages. All right. So they have specific ones that'll allow it. There is something called an introducing broker. Okay. An introducing broker is someone who is the customer service rep for your brokerage. Okay. That introducing broker executes the trade for you. So in big fancy terms, letter of direction, the actual legal definition, individuals authorize a third party, usually a professional money manager or broker, to execute trades on their behalf on a predetermined set of rules, guidelines, or in our case, to follow signals from a particular trading program. Okay, that's the legal definition. All right. This is the layman's terms. Your money stays in your account. Okay. It's pledged to a block account. Each night it's settled back to your block account based on the allocations from your account. So if it's a loss, at the end of the night, it takes the money out of your account. If it's a win, it puts the money in from the block account to your account. Your money's pledged to that block account. It doesn't move out of your account every day. Okay. Um, One major advantage that I like of letter of direction is, let's say that there's 100 accounts trading and there's slippage, and 20 of them are losses. Okay, so there's 20 let's just use simple math. There's 100 contracts trading, 20 of the contracts are losses. Those 20 losses aren't allocated individually to people's accounts. The blended average is allocated. Okay, which as an individual trader, you don't get that benefit. Okay, so if you're behind on the trade and there's slippage in your account, but say Ryan's taking the same trade I am and he doesn't get slipped because his broker is better, faster, bigger, stronger, whatever, I would get my allocation, he would get his. When you're trading in an LOD, you get the blended average, which is a huge, just amongst us girls, that's a huge benefit for long-term success. Huge benefit for long-term success. Okay. So that's letter of direction. If you have any questions on it, please feel free to reach out to us. Our letter of direction partner for this particular software right now, not saying there won't be others in the future, but for right now, we use Capital Trading Group. Okay. They're 20 years as an introducing broker. If you've got accounts at StoneX, RJ O'Brien, Dorman, Ironbeam, I can go down the whole list. They've got all the major brokerages. They are the IB for. All you do is, if you already have an account that you want to use, you just switch to your you just do the paperwork to switch who your IB is to them, and you sign the letter of direction software. All this will come in an email, so you don't have to write it down. I'm just including it here. One advantage with us, okay? This is a huge advantage and why we love Capital Trading Group. We have a long-term relationship with them, okay? You don't deal with like the low-level, entry-level staff with us when you deal with them. The partner at their firm that's in charge of the customer service side, the customer support side, that partner is your contact. Okay. So there's a big difference between working with them and working at, say, StoneX, or directly to StoneX or directly to these firms, where you're going to deal with low-level people until you complain enough to get to a high-level person. We're going to be dealing directly with one of the founding partners. Okay. Huge advantage. Nell is amazing. Those of you guys that have worked with her before, she's an absolute sweetheart. She's fantastic. Yes, thank you. Thank you, Doug. Um, so, EmergentEdge, the two technologies, okay? One that's available on Sierra charts, okay? It's currently priced, if you want to download it and use it on your charts, there are advantages to doing that, right? You can use it on any scale you want. You can use it however you want that way on Sierra charts, okay? It's $5,000 a year for the license, okay? It's an annual renewed license at $5,000 a year. I am going to tell you that that number is not going to stay at $5,000, okay? It's going to go up, all right? It is fully
And really,
automated.
dude, and just, I'm sorry to interrupt you. Just to let you know, we're only going to sell 25 seats of the actual software
Max.
program, and
Right.
that's because people can change the size, they can
And it screws
manipulate the
everybody
room.
else.
Yeah, and so we can't cannibalize the LOD program, so we're only selling 25 seats. When those are gone, it's over with.
Yep. So the LOD program, there's 50 seats. Okay. But that's 50 seats total. I want to be clear. So
Yeah.
if they sell five of the Sierra charts, there's only 45 seats left. There's actually only 46 right now. Four of them have already been sold. They were actually sold prior to even this call. People are hot to get into this right now. It's $2,500 for the year for the letter of direction program.
Yeah.
Okay. That is 2 to 10 micros. Recommended minimum account is 10. You can go less than that. Just understand the risk that if you do go less than that, the drawdowns will be different. Okay. Of course, your yield will be different also. You'll have a higher return on investment, but your yield will be different. Okay. That's 2 to 10 contracts. If you want to scale larger than that, okay, if you want to scale larger than that, I want to be clear. If you want to go up to, trading 20 micros, and that's scaling to help me with my math here. What is that? 500? Where's my
Yeah.
math here? All
Yeah.
right.
You're right.
Or whatever it is. If you want to increase the number,
Yeah.
there are multiplier discounts, but I'm going to tell you that that still limits the total number of licenses that are sold. This is not a FOMO, we're trying to get you guys to buy in kind of thing. We've got people that want this. We're keeping the limit to the number of licenses because we don't want to cannibalize the trading.
Yeah.
Okay. We don't want to have to, and it's much easier to limit the number, pause and wait and see if it's causing slippage. Because we're going to see right away that when the slippage is caused. Because we're
By
going
the
to see
way,
that.
Mike's already tried to sell it cheaper than I'll let him. So the price isn't going down. I don't care what he
Yeah.
says.
Yeah, it's not. It's not. So yeah. Yeah. So just to be clear, that's where we are. Okay. So now we're already at 44 seats. Okay.
Nice.
So like I said, guys, this is a fantastic opportunity as far as I'm concerned. I think this is an amazing software.
It is.
I'm using it myself. If you want to learn more, reach out to Joe. I'm gonna drop a couple of links real quick, guys. Okay, so first, I know Joe dropped in the chat. I'm gonna drop a slightly different one right here. Okay, this is the buy now link if you want to execute right away. Okay. That's one. The second one I'm going to drop here, guys, is let me get to my summary thoughts. Is I'm going to drop everybody's email addresses. So the only person I'm not putting in here is Rob. I don't want to put Rob's because we don't let people talk to Rob.
Yeah, that's right.
He's not allowed to
It
talk to the
keeps me in the
public.
basement, the lab.
Yeah, that would
He's
mean
chained to
you'd
his
have to let him out
keyboard.
of his cage.
He's
But
chained
no,
to his
we really do like to keep Rob isolated. If questions escalate to that level, of course, we'll move him into the conversations. But we really do like to keep him isolated so that he can keep building out great programs like this, guys. So that is everybody's email addresses. That if you need them here, feel free to reach out to us. Ryan, Rob, did you guys have any closing thoughts on this?
Rob, you want to fire away? I know you've always got something slick to say. Let's
So,
hear it.
no, it's super exciting to put all this together. We've been working really hard on this for a while, especially the whole backtesting engine. But the other thing I want people to know is we haven't done a lot of optimization of this at all. And that's on purpose because the more you optimize, the more you curve fit, the more things look really good on a backtest, and then out of sample, things tend to fall apart. Ryan and I have been trading this basically paper trading it since January 1st, and then a month later, live trading it, and it's still holding up out of sample. So we do have a bunch of tests to look at different sharp ratios and things like that, and it's still holding. So feels confident this thing hasn't been over optimized.
I think there's plays, and I love that concept. I think there's plays with this without the over optimization. I think it works so well exactly where it is, and I feel like every time, and maybe it's just my experience, every time people try to over optimize, they cut missing points or they define it specifically
Yeah,
for those market conditions. Yeah.
yeah,
So,
yeah. Well, listen,
Ryan.
Rob and I have been doing this for a long time, like trying to make algorithms. Like this is kind of how our relationship started. And we have went down the over curve fitting optimization rabbit hole a few times. So now it's always like at the forefront of our radar, or, it's always like, are you sure? He's like, no, we're good. We're good. So yeah, I mean, this is a super exciting product, guys. And the reason why I'm even more excited about it is the product that Rob has developed. And again, I'm just going to pump him up. And some of you guys have heard me say this before. This backtesting engine is the only one in the industry. I mean, we literally have the industry on lock as far as a backtesting engine for futures. The only people that would have stuff like this are hedge funds and CTAs and people that are like Citadel and stuff like that actually have this. And this is an 800,000 lines of code that Rob has built to essentially, backtest and optimize and do certain things. And so it kind of puts us in a very unique position in the market to be able to roll these out at scale, which we're really excited about because Rob is essentially, and again, I mean, not to sell myself short here, but I have been making strategies and trading for a long time. And Rob was kind of the missing link to bring all these ideas to life. And so that's what we're doing now. And it's such a good feeling to see them evolve into working functional models that can help other people. And I know that a lot of you guys in here know me, but listen, one of my biggest things, and I say this in the room all the time, I love to see you guys win. I mean, that's kind of why we're doing this. So, we're getting our piece. So don't think that we're not using it ourselves either. So this is just kind
Yeah.
of people out. Yeah.
Yeah, the eat our own dog chow. Yes, if something's not working, that's a problem. But when it works, it also
Yeah.
means we get the benefit of it too.
Yeah, for
So,
sure. Absolutely.
um, And I have to say, one of the things I really enjoy when I speak to you and I speak to Rob is your guys' knowledge basis. And I know it's not something we've talked about today, but guys, if Ryan sounds sexy to you, right? If what he's talking and how he
Hey.
understands the markets, I cannot stress it enough. Check out if you want the information, shoot me a quick email. I'll get you his info and stuff um, for the S&P Edge, his daily trade plans, all those other things, guys. It's a really, really, really beautiful configuration. And I honestly don't know a better word to say it than that. You're a serious trader, and you
Yeah,
have been for years and years.
it's my
And you
career.
live, yeah,
Yeah,
you live, eat, and breathe this. I mean, this is all you know, and this is what you know, and you do it really well. Maybe not all you know, but
pretty
you live,
much.
eat, and breathe
I
this.
feel like.
And very rarely do you find someone nowadays that this was their first battlefield,
Well,
right?
Joe's the go-to guy, but you guys are more than welcome to go to the website and look. I mean, I got a lot of detail on there. We spent a lot of time building this out, so it eliminates the need to people to ask a lot of questions. But if you want to check out Vici Trading Solutions, all this stuff is on there. You get a lot of detail, and then Joe can guide you to the right place. So,
Yep. So we're big fans, guys. Thank you very much, students. If you have any more questions or anything, let me know. I'm going to leave the chat up for a little bit longer. Uh, Ryan, I know you guys got to Ryan and Rob got to get back to work, but I want to
yeah,
say thank you guys very, very much. Appreciate the time. Looking forward to
absolutely.
this. I've already got my license in place. I'm ready to go. So very, very, very appreciative. Rob, thank you for making the time to talk to us. Ryan, thank
Yeah,
you.
thank you.